on your money.
Fractional investing, or buying a tiny slice of a property, could be the fastest way to break into the real estate market, but it's not without its risks. So how should you invest safely and profitably? Kareene, CEO of BrickX, joins us now for her insights, and I'd just like to bring in my co-host for the morning as well. The lovely Cherie Barbers joined us to help with some auction talk and also some great real estate investing tips, because you know this stuff better than a lot of people. So great to have you along. Thanks, Cherie. So, Kareene, welcome to you. Look, besides the low capital outlay, what are some of the big benefits of fractional investing?
Yeah, so look, for a lot of people it is the low capital outlay. That is a major benefit. But also it's basically the ability to diversify your portfolio. So you can invest in a property without having all your eggs in one basket. You can choose to invest across a range of properties with the same amount of money that you would normally have hidden in one investment. The other major benefit of our platform is that people enjoy the ability to have liquidity. So you're not locked in for a fixed term. If you need to withdraw money, if you need to sell your bricks, then you've got the flexibility to do that on your own terms.
I love the idea of fractional investing. So obviously it gives a lot of people an opportunity to buy into a property when they can't afford a whole property. Yep. There are a few players in this space, so how does BrickX compare to that?
Yeah, so one of the big points of difference I've already mentioned is the liquidity component, so the ability to sell out. But also we have our experienced property team who advise us on buying quality properties that are existing residential properties in Australia. We choose great quality properties in high growth suburbs, and that's really appealing for people that they can see there's a backing and a strong property team sitting behind the choices that we make. The other difference is when you compare us to something like a real estate investment trust, you can actually choose which of those properties you want to invest in. So if you're a sophisticated buyer, you can investigate the properties yourself and do what we call build your own, choose the properties that you want to buy bricks in. If you don't feel as confident, you can give us control and ask us to invest on your behalf based on our investment strategy, and we call that Smart Invest.
So how are the returns different then, just sort of following on from Cherie's question, to other players in that space? How do you sort of ensure that your profits are maximised if you go with BrickX?
So the returns are just like those of an investment property. So you have the ability to gain capital returns, and then you've also got net rental yield. On a monthly basis, we distribute a net rental yield to each investor based on their portfolio. And then over time, because it is a medium to long-term investment, you have the opportunity to gain capital returns on the value of your bricks, depending on the purchase price at the time versus when you choose to sell.
Okay, so in terms of your customer base, who are the type of people that are actually going to BrickX? Like, who's your demographic?
Yeah, so really it's more property investors, to be honest. It's people who either haven't invested before but want some exposure and understanding of how it works, or you have more experienced investors who actually like the idea of having someone take care of all of the management for them. We also find self-managed super funds find it quite appealing as well.
All right. So how much does it cost for somebody to get started? Like, is it a little bit? Is it a lot? Or?
Oh, look, you can get into BrickX or invest in BrickX for as little as $50. And then you can go from there. So it's very accessible.
So what does $50 buy you?
So the lowest price brick on our platform is around $33, $34 at the moment.
So you would know exactly which property you're buying into. You get to choose which, you're not sort of paying for the performance of the whole portfolio, you're paying for the performance of one particular property?
That's right. And that's where, over time, people typically invest in a portfolio so that their exposure is spread across, a range of properties in our portfolio. Yeah.
So what are the typical sort of returns then? What could you expect if you do start investing with, say, $500?
Yeah.
What might you get back in 4 or 5 years' time?
So obviously it's difficult to say because everyone's portfolio is going to be different. But at the moment, our net rental yield on average is 1.7% across our portfolio of properties. And then you have capital returns, which again, it depends on what's happening in the market, property cycles, and then the individual properties as well.
And how are those capital returns realised? Can you just reinvest back into bricks in a certain property, or are they something that are paid directly to you?
So they're realised through the exchange itself. And so when you buy the brick at a price, over time, depending on the capital returns, what we find is that the market reflects the price of the property over time. So if the property goes up by 10%, the price of the brick tends to go up 10%. Eventually we do sell our properties, but that's over a 5+ year term. So that's how you get the benefit, basically.
So it sounds like almost like shares, but just like property shares, very similar to a property syndicate. Would you say that's correct? Kareene?
Yeah, probably more akin to a syndicate, I'd say. It doesn't have, the full liquidity of an ASX or something like that. Yeah.
And can people, do they have to be actively involved, or is it very much just sit back and watch your portfolio grow?
Yeah, it is more of the sit back and watch approach. So once you've invested, you would treat it like you would an investment property. So an investment property isn't going to turn around in 6 or 12 months and deliver a capital return outside of what the market's doing. We typically recommend it's a medium to long-term hold.
Right, let's have a look at some recent deals. You've got one in Kingswood in Adelaide. Tell us a bit about the investment and the initial outlay here for people who are involved in that property.
Yeah, so Adelaide was one of our more recent deals, and we bought in the suburb of Kingswood because it's a lovely suburb. It's well located close to the city. It's got strong appeal for renters as well as a lovely community that sits around it. It's close to a number of the local schools, both private and public schools, so it's always going to have that underlying appeal.
And it is a blue chip area of Adelaide, and Adelaide is just staggering in terms of what you get for your money there compared with other capital cities.
I know, because we bought in at the price of $567,000, which obviously coming from New South Wales, that does sound like a little bit of a steal.
Yeah, for an property like that.
So yeah, that was one of our more recent purchases. Yeah.
Soldiers Hill in Ballarat North in Victoria. Tell us a bit about this property and why you bought in on that one.
So Soldiers Hill was a purchase that we made because Ballarat and Soldiers Hill in particular, it's one of 3 blue chip suburbs in Ballarat. And it's only an hour and a half commute from Melbourne. So what we saw was that there's both really good net rental appeal, but also it's starting to become accessible for people who maybe can't afford to buy in Melbourne and are willing to commute between the 2 areas. We purchased the property in, I'm just trying to recall actually, August of last year for $401,000.
And those sort of regional cities in Victoria are getting a lot of growth at the moment, aren't they? We're hearing a lot about Ballarat, Geelong, Bendigo, these sorts of places that are established cities but commutable to Melbourne. So this is part of the strategy, is it, finding growth areas?
It definitely was, and also there's an upgrading of the train line that's happening between Ballarat and Melbourne, so there'll be increasing train flow between the cities in 2019, and so we felt that the growth prospects for the city were very positive.
And the strategy is to hold on to that property for 5 years? Is that a fixed term, or if the property is performing particularly well, do you sort of sell out of it later or earlier? Or
look, we have a rule of thumb of 5 years, and that's when we'll always review the property, but we look at our properties on a quarterly basis with our property team to monitor their performance and make sure that they're performing against the mandate. So yeah, we take it as it comes.
So who makes the decision then to sell? For example, if you see that you've maximised the value of that property and you think we can't get any more capital growth, will BrickX, somebody from BrickX go to those investors and say, hey guys, we think it's time to sell? Is that normally what happens?
Yeah, we make a recommendation, but still our members as well as our property team will advise whether or not that's the right decision for the right time. So we have, I suppose, controls in place to make sure that we're always acting in the best interests of our members.
What happens if what happens if some members don't want to sell and half do, half don't? What happens then?
It's a vote, so we need to have over 50% of members, and that's a bit like a syndicate, I suppose, yeah.
Prahran in Melbourne, another example. So this is a blue chip area, obviously. You're not really taking high risk strategies with these investments, are you?
No, we're not. We really are looking at quality properties in high quality suburbs.
So tell us about this property in Miller Street in Prahran. Why was this a good investment?
Well, Prahran is a very well-known and popular suburb. I think over nearly 50% of the population are working professionals in management professions. It's got a high level of rental income with a population that's generally between 20 and 45 years old. So it was very attractive in terms of its long-term rental prospects. And we purchased the property in 2015 for $1.15 million, and the most recent valuation in December had it valued at $1.22 million. So we're very pleased. The net rental yield's currently at 2.41%.
Which is strong for Melbourne, isn't it? Because rental yields aren't all that great in Melbourne typically, especially in these kinds of areas. We can look at another one now at Annandale in Sydney, the inner west. Now, this has had a bit of a rocky time in that part of Sydney, particularly over the past 18 months. So how has this investment held up?
So Annandale has done very well, actually, considering the market environment. So we purchased Annandale in in November 2015 for 1.27 million, and its most recent valuation was 1.437 million in December 2018. So it's held very well considering the current market. And Annandale's a lovely suburb. It's in a strong catchment area. 5% of the suburb is actually parkland, which makes it really appealing to young families as well as renters. And it's highly commutable. It's only 5 kilometres from the Sydney CBD. So, you know, for a number of different reasons, I think it's incredibly appealing.
And it looks like you target properties that have already been renovated, completely finished.
Yeah, they're not your cup of tea, are they, Sheree?
Yeah, we still love them all.
She loves her ugly ducklings, but these are all beautiful properties that somebody like Sheree's already done the work on.
That's right, yes. They tend to be good quality properties that have been either recently or, you know, quite recently refurbished or renovated, and they are all quite beautiful properties. Yeah.
Awesome.
Now, how does BrickX make a profit out of this?
So we charge a fee when people buy and sell bricks of 1.75% on the purchase price and then on the sell price. So that's how we make our fees.
Fantastic. Well, it's certainly a great way to get started in the market, and it looks like a very safe way to invest as well. Kareene, thank you so much for your time today.
Thank you for having me.
We're going to take a short break now, but just ahead we'll preview our first live auction of the day. Stay with us.
Your Money presents more auction day up.
If Labor and Bill Shorten get their way on franking credits, investors might have to look elsewhere for investments. We'll shine the spotlight on these